Welcome to the Pro Ticker Deep Dive.
Today, we are diving into something really fascinating, a paradox that's kind of rewriting the rules of the entire global auto industry.
It really is. It's this battle for the electric vehicle throne. And it pits the established king, Tesla, against this manufacturing giant that most people outside of China or Europe haven't really heard of, BYD.
And this is so much more than just a corporate rivalry. It's a total collision of philosophies. I mean, Tesla was the pioneer, right? The undisputed volume leader for so long.
Absolutely.
But now they're watching BYD just race past them in production scale. Our mission today is to figure out if this is a real changing of the guard.
And the answer, as we found out, is not simple at all, because they're not even competing on the same chessboard.
They're playing totally different games.
That's the key. On one side, you've got BYD, and their whole strategy is about volume and extreme vertical integration. They control pretty much everything.
And on the other, you have Tesla, which is all about value, high margins, and this is the critical part, software.
So we have to figure out which one wins in the long run. Manufacturing muscle or, well, a technological moonshot.
Let's get into it.
Okay, let's start with the hard numbers, because BYD's rise in sheer volume, I mean, it's undeniable in 2025.
It's staggering.
If we just look at pure battery electric vehicles, the BEVs from January to September, BYD delivered 1.61 million of them.
Right. And Tesla.
Tesla, in that same period, delivered 1.22 million. That's a gap of almost 400,000 cars.
And this isn't just a one-off quarter. BYD has held the global sales lead for 4 consecutive quarters now. They have captured, 15.7% of the entire global EV market?
But here's where we have to make a really key distinction. BYD's volume isn't only from pure electrics.
No, not at all. They also sell a massive number of plug-in hybrid electric vehicles, PHEVs, and that's a huge part of their story.
It is, and when you look at the top-line revenue, you really see it. BYD generated $107 billion in 2024.
Which was actually a little more than Tesla's $97.7 billion.
Exactly, and that extra revenue comes from that diverse mix where PHEVs act as this kind of bridge product for people not quite ready for a pure EV.
Right, but now we get to the big divergence, the thing that defines this rivalry. Profitability.
Yeah, this is where it gets interesting.
Tesla is just an efficiency machine. Even though BYD sold nearly double the number of vehicles, Tesla made more profit in Q3 2025. We're talking $1.4 billion net profit for Tesla.
And for BYD.
$1.1 billion on almost twice the sales. Tesla just makes way more money per car.
And that profitability gap leads us to the biggest paradox of all. The market valuation. It's just wild.
It's astronomical. Tesla's market cap as of late 2025 is sitting around $1.29 trillion.
A trillion. And BYD?
It's about $125 billion. So that's a tenfold difference.
Okay, so how do you explain that? How can the market assign such a massive premium to the company that's selling fewer cars and has less overall revenue?
It's because the market isn't valuing what's happening today. It's valuing future potential. That $1.29 trillion bet is investors saying Tesla is way more than a car maker.
It's a software company, an autonomy company.
Precisely. The bet is that Tesla can achieve software-like margins on hardware, and that its full self-driving tech will unlock this recurring river of high-margin revenue, that old-school manufacturing, even BYD's amazing vertical integration, just can't touch.
So BYD is still valued like a car company, just a very, very good one.
Exactly. A very powerful, efficient automaker, but still an automaker.
Okay, let's dive into that a bit more.
Yeah.
What gives BYD this incredible volume advantage? You mentioned vertical integration.
It's their secret weapon, their moat. They sell everything from these tiny, affordable city cars for around $10,000.
Like the Seagull.
Right, the Seagull, all the way up to $150,000 luxury sedans under their premium brands. But the magic isn't the variety, it's what's inside the cars.
Right, because unlike Tesla, who has suppliers for a lot of core parts,
BYD makes its own. Their own motors, power electronics, semiconductors, and the absolute key to all of this, their own batteries.
through their subsidiary, FinDreams Battery.
Yeah, I mean, think about it this way. When Tesla builds a car, they buy battery cells from a supplier. Very efficient. Yeah. But when BYD builds a car, they might have mined the raw materials, processed them, manufactured the cell itself, what they call the blade battery,
Right.
and then put that cell into the car.
That level of control is just unheard of. It lets them sidestep all the price swings and raw materials and just slash production costs.
Which is how they're winning the price wars.
Let's talk about that battery tech, the blade battery. What makes it so special?
Well, it's a game changer. It uses a chemistry called lithium iron phosphate, or LFP.
Which is cheaper and safer, but usually means less range, right?
Traditionally, yes. LFP batteries had lower energy density. But BYD got around that with a brilliant design. It's called cell-to-pack.
So they got rid of the modules inside the battery pack?
Exactly. They just package these long, thin cells directly into the pack. It increases space utilization by over 50%, so it makes the battery safer, cheaper, and it's even part of the car's structure. And it's super durable engineered for over 5,000 charge cycles.
An incredible competitive edge.
Right.
So now let's flip back to Tesla. We said they make about $2,800 in profit per car versus BYD's $990.
Yeah.
Where does that money come from?
It's a combination of things. They are relentless on manufacturing efficiency with things like gigacasting.
Right.
But the real key is the premium brand position and, increasingly, software. The money they're making from full self-driving subscriptions is pure high-margin revenue. It has nothing to do with the cost of building the car itself.
Plus their energy business, Megapack and Powerwall.
A huge and profitable part of the business that BYD hasn't really matched yet. Tesla's plan is clear. Sell the hardware for a good profit, then just monetize the software and services forever.
Okay, so it's important to remember all of this is happening against a really turbulent backdrop. The EV market is booming, right? It's set to hit 20 million units in 2025.
A 25% year-over-year jump. It's huge, but the environment is brutal.
We are seeing this just vicious margin squeeze. It's mostly being driven by the price war in China, which is the world's biggest and most competitive EV market.
Absolutely. Over the last 2 years, the average EV price in China has dropped by about 19%.
19%. That's just not sustainable for most car companies. And it's hurting even the leaders.
The numbers really show it. In Q3 2025, both companies saw their net income drop. BYD was down 32.6% year over year.
And Tesla's dropped even more, right?
Yeah, a sharper 37% drop. And if you look at BYD's gross margin for that quarter, it was 17.6%, which is down over 6 percentage points from the year before.
So even though they're pushing all this volume, the profit they make on each car is shrinking fast because they have to keep cutting prices.
Exactly. And on top of the price war, you have this second huge headwind, geopolitics.
It's tariffs.
The tariffs. The EU imposed them in 2024 because they're worried about Chinese state subsidies. And these tariffs can be anywhere from like 7.8% up to 35.3%. It's a direct threat to BYD's export plans.
But BYD isn't just sitting there. They're being really aggressive about global expansion and localization.
Oh, yeah. They're tripling sales in Europe, hitting over 80,000 units in the first 9 months of 2025. And they're building factories everywhere: Hungary, Turkey, Brazil, Thailand.
And that strategy is already working. We saw a huge milestone in October 2025.
A big one. BYD actually surpassed Tesla in European registrations. They sold 39,103 vehicles to Tesla's 35,455.
Which proves their strategy of offering these affordable cars, including the PHEVs that help with range anxiety, is really paying off.
It shows they can navigate these complex trade rules.
So looking forward, this rivalry really comes down to which company can execute on its biggest bet. For BYD, that bet seems pretty straightforward: global expansion.
It is. They're leveraging that vertical integration to scale up outside of China. They're targeting 1.6 million overseas sales in 2026.
But that carries huge risks.
Massive risks. Nearly 90% of their sales in 2024 were in China. They have almost no brand recognition in, say, North America, and they're facing a tough fight in Europe. Plus, all the regulatory scrutiny, data security, subsidy investigations, it's a minefield.
Okay, so now let's talk about Tesla's gamble. This is the big one. This is where that trillion-dollar valuation comes from.
Autonomy and software. Tesla is betting the entire company on FSD and the Cybercab robotaxi service.
The financial vision behind that is just staggering.
It's mind-boggling. They're talking about these autonomous cars generating, what, $35,000 to $70,000 in annual revenue per vehicle.
Per vehicle. That's not a car company's margin. That's a tech company margin.
Exactly.
Yeah.
But it comes with enormous execution risk. They've planned the robotaxi launch at Austin for June 2025, with production starting in April 2026, if that timeline slips.
Or if regulators just say no to unsupervised robotaxis.
Then the whole vision could be in jeopardy, and that valuation would face some serious pressure.
It's a true all-or-nothing bet.
It is. Although, we shouldn't forget their safety net, the energy storage business. Megapack and Powerwall are consistently growing high-margin products. They deployed 12.5 kilodoges of batteries in Q3 alone. That's real diversification. That's a good point. And speaking of risks, there's a unique one for Tesla: The CEO controversies. We've seen some specific research on this. We have. It estimates that political activities cost Tesla somewhere between 1 and 1.26 million U.S. vehicle sales from late 2022 to mid-2025.
So how does that actually work? How does political activity lead to lost sales?
It's a fascinating effect. The research showed that sales dropped sharply in Democratic-leaning counties in the U.S.
While other EV brands saw their sales go up in those same places.
Exactly. Competing EV brands saw surges of 17% to 22%. So for a big part of the market, the brand itself started to carry some political baggage, and customers just chose to buy something else.
A perfect example of brand cachet working against you. It's a risk BYD just doesn't have in the West right now.
Not yet. Their low profile is actually an advantage there.
So for our listeners who are investors, let's quickly touch on Tesla's stock performance in 2025. It's been volatile.
Very volatile. The stock started the year around $379, shot to a high of $474 in October, but has now pulled back to about $401 as of mid-November.
And that pullback is a bit of a warning sign, technically speaking.
It is. The stock is leaning bearish right now because it's fallen below two key indicators: the 20-day and the 50-day moving averages.
Can you explain what that means for people who don't follow technicals? When a stock falls below its 50-day moving average?
Sure, it basically signals a loss of short-term momentum. The 50-day average is a barometer of the stock's health over the last couple of months. When the price drops below it, it tells traders the stock is weak, and the key support level to watch now is $382.78.
And if it breaks below that?
The bearish mood could get worse. And analyst sentiment reflects all this uncertainty. The average price target on Wall Street is around $280.
Wow, so that implies a lot of potential downside from where it is now.
It does. Analysts are hedging their bets. The market is basically waiting for proof that the autonomy bet is actually going to pay off.
So when we put it all together, what does this mean for who wears the EV crown?
I think the main takeaway is that they are both winning, just in completely different arenas.
Yeah, it's a bifurcation of victory. BYD is the manufacturing juggernaut. They've seized the volume crown through just unmatched vertical integration.
And Tesla is still the technology moonshot. They're betting that the future isn't just about building cars efficiently, it's about reinventing the entire business model with software and autonomy.
Okay, so here's a final provocative thought for you to chew on. It connects back to their very different strategies.
Right.
BYD has had huge success, especially in Europe, by using plug-in hybrids, PHEVs. We saw Chinese brand PHEV registrations in Europe surge, 546% in April 2025?
A massive jump.
So given that the EV transition is happening, but charging infrastructure is still lagging pretty badly in a lot of places, how much longer can Tesla afford to stick only to pure BEVs?
That is the critical question.
Yeah.
That hybrid hedge is a huge part of BYD's success. It lets them grab customers who still have range anxiety or can't charge at home.
It's a massive segment of the market that Tesla is just not addressing.
Exactly. It makes you wonder if Tesla's purely electric vision is moving too fast for the world's infrastructure, and if that's leaving a huge window open for BYD's more diverse lineup.
A crucial strategic decision that could really define the next decade of this rivalry. See you all in the next Pro Ticker Deep Dive.